Good morning. Mexico trade balance SA T0595B June versus 0.9B.
Mexico jobless rate SCA 2.6% June versus previous 2.7%. Mexico trade balance 0.5 on 14B June versus previous 1.029B.
Crypto today, Bitcoin, Ethereum, XRP showcase bullish signals after US-EU trade deal. UK retailers log sharp decline in sales. In July, CBI.
US dollar odds yen extends gains to the 138.40 area as the dollar rallies after trade deals. Big week for markets coming up. India. Industrial output growth eases to 1.5%.
US dollar TRADARS likely to trade in a range of 7.37.730. UZOB Group.
Euro underperforming most G10 currencies, Scotiabank.
Mexico trade balance SA T0595B June versus 0.9B.
Mexico jobless rate SCA 2.6% June versus previous 2.7%. Mexico trade balance 0.5 on 14B June versus previous 1.029B.
Crypto today, Bitcoin, Ethereum, XRP showcase bullish signals after US-EU trade deal. UK retailers log sharp decline in sales. In July, CBI.
US dollar odds yen extends gains to the 138.40 area as the dollar rallies after trade deals. Big week for markets coming up. India. Industrial output growth eases to 1.5%.
US dollar TRADARS likely to trade in a range of 7.37.730. UZOB Group.
Euro underperforming most G10 currencies, Scotiabank.
Morning. The US dollar is lower after the US EU trade deal. What are the technicals telling traders now? All righty. All right. Michael, the withdrawal experience that I've had with them have been quick and easy. But crypto in, crypto out is just fast. It was just like hours. But anyways. All right, good morning. All right. Where is everything? I got to move a few windows around. Right. All right. So I guess that's good enough. Guten Morgen. Yeah, yeah. Yeah, so, hey, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Today we're going to cover euro dollar, gold, the S&P 500. We're going to look at the 10-year T-note. We're going to look at Bitcoin. So, hey, we got a busy morning, and in fact, we have a very busy week. There's all kinds of earnings. We have the jobs report on Friday. We have the Fed decision on Wednesday. We have ADP. We have GDP. And a whole bunch of central banks doing their interest rate decisions. Like, holy smokes. Shouldn't be a boring week at all. Let's go! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, well, that's not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So let's get on with our day here. Euro dollar. Actually, you know what? I forgot to do macro. Let's do macro. So you probably got the headline when we started here. So you got the headline update. And so now let's load up the macro. The database is loading. Now, of course, I've done all of this hour and a half ago. I've already done all of this for the members of traders.com. But anywho, let's take a look. Yields are down, but you know that we've been at that number for quite some time. Oil is up, huge. Again, an hour and a half, we already talked about this. Part of the European deal announced is that the European Union is going to buy, $750 billion worth of U.S. energy. That's new demand that didn't exist on Friday. Kind of makes sense. Gold is stable. S&P 500 wants to go up. Now, this is probably leftover from Friday because if this is up and this is up, this is typically down. Plus, having already looked at the scatter plot, we've already made that determination. And Bitcoin just farting around, doing nothing. So, yes, we've gone through all of these things like the scatter plot, the money market. We've already done all of this. Options market, done all of this. Heat maps. We've done all this. So, anyways. So that just shows you where we are right now. And now let's do euro dollar. Okay. For that, we're going to use the technical part of TRADARS. So you've seen sentiment. You've seen fundamental. And now we're going to go through our routine here at YouTube, which will cover euro dollar, then Bitcoin, then the 10-year T-note, then gold, then the S&P 500. Okay? So you have access to all of that. 3, 2, 1, let's go. Now, I did actually want to check what patterns we're looking for because you can adjust all of that. I want to get rid of key levels and Fibonacci patterns, and I just want to do these trending ones. All right, so there we go. So euro dollar, 4-hour and daily only. Down channel on a 4-hour with an opportunity, but that came out 4 hours ago. And so there's still an opportunity to bring euro dollar down. And notice here is if this is successful, so let's say two days of down on euro dollar will be a breach of this rising wedge, which can create lasting dollar strength. Now, is that normal or abnormal? Well, in the fundamental section of TRADARS, we have multiple, I think 3 pages of seasonality. What if you already expected the US dollar to be strong? Then this would have very certain meaning for you, wouldn't it? If you already expected this to happen, then sort of a lower low, lower high, lower low, lower high, lower low, lower high might make you actually excited, dare I say. You see? Versus just like, oh, well, I guess it's going down now. Dude. Really? Yeah. Really? Anyways, let's see how you guys feel about the market in general. I forgot to do the release of the poll. Thank you for participating. And And you guys, how are we going to call this? Neutral? I don't know. Because you have risk on and very risk on equals risk off. It's kind of interesting how your risk off 40. I mean, that's the most popular. But we just signed an EU deal, which removes so much uncertainty. Kind of interesting. Abdul says, Wayne, pound dollar looks like a head and shoulders. Well, since I'm doing this YouTube, I'm only looking at euro dollar. If I threw in all of Forex, you can go through all kinds of stuff. There's all kinds of things going on. But this is the freebie version on YouTube, right? But yeah, so euro dollar's not doing much, but once again, if you mix that with seasonality, you can measure the magnitude of what's happening, not just the fact that it's happening. So TRADARS does Bitcoin and Ethereum and others. Was it five different cryptos? So we'll look at Bitcoin now. We'll look at the 15-minute, the 30-minute, the 60-minute, the 4-hour, and the daily charts. And we'll look for trending patterns on those 5 time frames. And what we'll find is that's it. There was a falling wedge with a potential break. So lower high, lower low is possible. You might want to look at riding that moving average is one way of thinking about it. But in particular, if we get to the green zone, then you want to buy a dip probably tomorrow and then back up. And trending patterns otherwise don't exist on any of the other time frames. So why waste your time looking at the charts? I know, right? So here, I like to look at the 10-year T-note during these live streams because it shows me the flow of capital. Is it risk on, risk off? Okay. Is the money coming into the market or coming out of the market? But we track the top 20, I think it is, most traded stocks in the United States. So Apple and Nvidia and Google and Microsoft. And yeah, we track all of it. But we're only going to, since this is a Forex related live stream, we're just going to look at the flow of capital through the Treasury market. Yeah. And so anyways, look at this. 15-minute was trending up, now is a breach. Daily is neutral, non-trending, non-directional. 4 hours slightly up. Yeah, I think the way I analyze this is there's nothing happening. Nothing clear. Is there clearly a trend here? This one says down, this says sideways, this says up. All right, but we'll see when the market's open. I think many expect the stock market to rally today, and yet in our poll, 42% of people are risk off. But we just did as Trump would say, the biggest trade deal ever done. So I hope you didn't miss that part, because you're not supposed to be missing that kind of stuff. You have to know that kind of stuff. But let's take a look at our gold. Okay. And gold has been flat for a while, and we're in a triangle, kind of non-directional. So that's that. That's that. Just now, is it seasonal? I don't know. I mean, but like, look at this. Let me just give you a cheat code, a cheat sheet. What does gold typically do, right? Like, so you go to seasonality, you go to the tool, got to let it load. It's a live database. There you go. And you can go to gold, for example. Okay. And, oops. Delete. There you go. You have, right? Did you know that? What about looking at seasonality this way? Gold this week, next week. Gold this month, next month. Next month coming up. That's August. You know that? You should. Gold. Okay. So up and then down. So I already have the next 60 days planned out. This is the power of TRADARS. You can think 30 and 60 and even 90 days in advance. So one of the things that we talked about this morning in our TRADARS stream that we did internally at TRADARS is maybe me doing a training event where we do a planning retreat the way that a hedge fund would plan 3 months in advance. Right. And I used a capital raise as an example of, how to raise, let's say, how to raise $1 million by October. Why October? And how do you do it? And why do you know it? And, how do you frame it? But just imagine if you're able to do that so that you already knew what you want to do in October, then when you get to October, you're already mentally and emotionally ready to actually carry out your strategy. Versus just walking in every day, doing whatever is happening. So I'm already like constantly thinking about October. Yeah. I have a very clear outlook for that. Okay. So anyways, what's going on in the S&P 500? Wayne, there's good news happening. So what patterns exist? And none. No trending patterns. So I'm going to have to expand out here and go to pattern types and just say all. Is there anything happening on the S&P 500? Let's take a look. No. Now, doesn't mean it won't. It just means it's not. But I think we're going to have a hot and fast open. Okay. So anyways, that's great. We have a big calendar this week. FOMC on Wednesday is a doozy. Non-farm payrolls on Friday, but we also have GDP. We have a whole bunch of earnings. In fact, why don't we go back to the sentiment section here and go to our news radar. The most important things are here. So this is a great way to plan your week. So we have jolts tomorrow. Okay. Inflation. Okay. This is a big deal. Okay. Australian interest rate decision. And look at, yeah, this is going to move the market. Well, apparently so. One is at 130, the other at 4. Yeah. All right. EU GDP, that's a market mover. US GDP, that's a market mover. Bank of Canada interest rate decision, that's a market mover. United States interest rate decision, that's a market mover. Bank of Japan interest rate decision, that's a market mover. Yeah. Consumer confidence, right? French and is that, what are those colors? I can barely see it. Yeah, Italy. So, well, anyway, so Italian and French CPI are market movers that provide reliable, repeatable trades. Then we go to Germany. You're kidding me, right? Personal income coming out of GDP on Thursday. Inflation on Friday. Non-farm payrolls on Friday. ISM manufacturing on Friday. Like, dude, is this like the biggest week ever? Plus earnings. There's something like 100 companies reporting earnings this week. Big ones, too. That's like the biggest week in a very long time. You might have to organize this by, like, what are you even going to be available for, and then schedule things on your calendar. I don't know if you use this tool, but like, don't forget about Bank of Canada. Okay, Bank of Canada interest rate decision at 9:45. So I'll put that in my calendar. Cool, right? The GDP. One of the things I did last night. So I got off an airplane and got straight home, walked in, and did a live stream with TRADARS. Sunday night, straight off an airplane. I still smelled like an airport. Still had a tie on. And we downloaded and read all the major economic reports from the week before. And one of the things we discovered in, I believe it was the composite U.S. PMI data, was what GDP should be relative to our productivity through PMI measurements. And we already have a general outlook for what U.S. GDP slash, this is where personal income comes from. So we've had, again, if we go to the fundamental side, and we go to GDP, okay, we know what has been, and based on downloading and actually reading and analyzing a report, there wasn't even like a section in the report. It was just a chart they gave us. And I was able to break down the relationship between the composite PMI and the likely GDP of the time. And so we've had negative GDPs recently, but based on that, we have a new measure of what GDP probably is when you remove the government intervention of trade policy. And yeah, so now we have the sort of the predictive level of GDP relative to our levels of PMI. And I would consider that, I don't know, fairly smart. Fairly smart. So anyways, all I'm saying, this is a good thing. So the markets are likely to move this week. The other sort of heads up I gave to the TRADARS subscribers earlier is like, if we do go risk on, I don't know, maybe take a look at some of the exotics, the high yielders. Maybe you catch a carry trade. Maybe. Could be a rabbit, could be. We've made some progress, but I've been out for several days doing charitable work. So I have to get updates from my teams. But the bottom line is we got some upgrades coming to TRADARS, which I think you're going to love. Really cool new data points, but also a new service that will save you time like crazy. Everybody want to save some time, or can you just make more time? Well, I know you can't make more time, so I can at least save you some time and keep you informed. So that new service I'll probably announce by the end of the week. I just have to meet with a couple of different teams to see where they are, but I know we were 90% done both projects. So anyways, it's going to be a great week, everybody. I'll see you at 4 p.m. over at TRADARS. Let me just pull this up, check our schedule. Yeah, so I'm up at 4 p.m. to do essentially day trading, right? Emerald's risk off, but you know the interesting thing is with the EU deal that removes uncertainty. And having read a whole bunch of central bank reports lately, they all talked about uncertainty, uncertainty, uncertainty. And, you know, 3/4, 75% of the uncertainty is now gone. Okay. Oh, well, Kanara, the number one reason for what you're talking about is because you're using patterns wrong. You have to stop looking at them as alerts of signals. They're not signals. They're patterns. And 99% of the misunderstanding is not understanding any fundamentals at all. And you know, another thing is like the arrows mean something to, if you're a signal trader, you're like, oh, well, that means up. No, not necessarily at all. No, that's not what that means. So, yeah, that's why you need performance coaching, right? Like, that's not what that means. But whatever. But that's why we're here, right? Canaric, so I can fix you. I can fix that. Yeah. It's a pattern. Yeah. All right. So, anywho, yeah. Well, but see, that's the thing, and maybe, I mean, that's the thing. I don't want to say. I want to say it clearly. There patterns are not predictions. In particular, what we have at TRADARS are patterns that are emerging. So in essence, you got to do like if-then statements. So instead of like just talking about it, let's pull something up. Okay. You have to look at these as if-then statements. But before you even get to that, like, who cares what the pattern is? It's irrelevant until you have this going on. So let's go to a scorecard summary. Like one basic strategy, okay? Oh, no! We're in the middle of updates. Right as I bring it up. Let's see if I can get that scorecard. There we go. All right. There's a couple of ways of doing this. You could use the absolute macro score, right? So let's put it this way. Okay, euro pound. We have a score of 8. So Karnak, what if in the technical section you saw some sort of pattern and it had a down arrow like this? So what does this mean? Okay, and I guess I'll draw some sort of pattern in here. Okay. So does this mean sell? There's an arrow pointing down. No. What does it mean? It means it looks like a series of lower highs and higher lows is forming. Okay? You see? If you were fundamentally bullish with a score of 8, there's a couple of things going on. If this pattern is happening, I mean, that is a triangle, which, by the way, is non-directional. But then, whatever reason, we actually kind of make a lower low, and it gives a little arrow here. So what the arrow is telling you is we have threatened the bottom of the triangle. And if it breaks, then the triangle is no longer valid, and we're likely in a downward move. So it's an if-then. If the pink arrow happens because we're threatening the bottom support line of a sideways trend, then the result has a high probability of creating a downward move. It's not happening yet, but in the future. But then on top of that, you're supposed to say, well, I'm a bull. So that's just a threat to my bullishness. Okay? But in that triangle, what you're actually looking for instead is the scenario of this. Because you're a bull on euro pound. So if it breaks to the downside, it's a threat to your fundamentalish, and you say, well, not now, because my bullishness is under threat. But if the opposite happens and it breaks out and you want to buy a dip, now you have the confidence to let it run. But it doesn't tell you up or down. It's just telling you, did we break the bottom part of the potential triangle, or did we break the top part of the potential triangle? But it doesn't tell you to buy or sell. And that's where people get confused, because maybe they're just not trained properly, right? So if you said, well, I'm bullish, and it seems to be in consolidation, but then this top part has been breached, then what TRADARS will do is it'll put a target there, and we'll be at this level. And so you should already know, buy a dip at a roll reversal, maybe off of a moving average, maybe off of a different pivot point or something. But if this has broken, then that's the likely move. But that's not even technical analysis either. You see that, Karnak? So now all this says is, if I'm a bull and it's consolidating and the consolidation seems to have broken, then I want to buy dips off pullbacks. It could be a moving average pullback. It could be a Fibonacci pullback. It could be a moving average pullback. It could be a pivot point pullback. But all I know is I want to open up this euro pound, which I'm bullish on fundamentally, with a potential bullish pattern. I want to open that up on my charts and trade that today as a bull looking to buy dips. But it doesn't tell you to go long. It tells you to go to your chart. And if it instead was showing downward pressure, most likely it says, well, you want to buy euro pound, but not likely today. That's how you use it, you see? But of course, nobody really is trained that way. And that's why, I don't know, the success you seek seems to be elusive. They're misunderstood. Well, they're not misleading. They're not misleading, but they are. I understand what you're saying, but it's only because people have not been told the right information. Not us, but the other users, for example. The arrow in something like this okay, right? Okay, that arrow doesn't mean sell. That arrow says the uptrend, which was measured by the up channel, okay, seems to have been tested. And if it breaks, then it's likely based on the size of the pattern. So now it's going to measure here to here, is predicting here to here, which is standard technical analysis. But it's not bearish. Not yet, anyways. But if it does become bearish, then you should also know, based on proper technical analysis skills, that your next move would be a lower high, lower low. And if that takes place, of course, this uptrend goes away, and we're probably in a new regime of a downtrend. But none of that exists yet. And so you need to know how to thread the needle. Like, so the way that we do it, and by the way, in the description below today's video, there's a download to go through all these patterns, and it shows you how to trade it. But we use a SWOT analysis. Okay, so let's see if I can put all those drawings back. Okay, so think about this. Oh, and I think there's a blue line right here that I need to draw. Okay, the blue line, the channel is the channel being under threat. And everything else is hypotheses. Okay. Is the trend in blue, does that exhibit strength or weakness? Don't worry about the arrow. Worry about the current existing pattern. Because remember, what we're showing you is things that are emerging, that might happen. If it's already happened, then it's useless because you should have already traded it. So you don't want after the fact stuff. You want forward-looking stuff. But what's happening is the blue channel. Does that show strength or weakness? Please answer. Hello? Wow. Did I stop the stream or something? Hello? Is it still running? Did it drop? No, looks like I'm still. Yeah. Wow, is there that kind of lag? Wow, that's crazy. Wonder why YouTube lags so much. Okay, yeah, so we'll go back. Strength. Okay, Karnak, you see what I mean? It's strength. So it's got a pink arrow down. It does. You don't sell strength. Okay, so now the next thing is the arrow. Is that an opportunity to sell or a threat? Is that an opportunity or a threat? To our strength. I'll be more patient this time. I didn't realize there was like a 35 or 40-second delay on YouTube. Come on, YouTube. Jiminy Cricket. YouTube, you have $1 trillion worth of revenue. Speed this up. Okay, an up pattern with a down arrow is a threat to the up. So there you go, Karnak. It would be a dumb idea to sell an uptrend. And that simpleness is easy to be misunderstood. I understand that. But see, TRADARS is built on the understanding of market sentiment, market fundamentals, market technicals, and we have performance coaching because we're about your success. It's not an alert service. If you don't understand, then it's a waste of time. It's about learning how to fish. Than me promising you, you're going to pay some money and you're going to hunt whales all day. No. All right. So anyways, and should we be interested in an up pattern? Well, for that's not even a technical question. That's a fundamental question. So euro pound, okay, seasonally is usually up and technically is up. So, and based on comparative analysis of macroeconomic data, should be up. So it should be up, usually is up, and is up. So am I interested in buying strength? Yes. Is this a buying opportunity? Well, you do want to buy at the bottom of the channel. But if it breaks, then you've lost the technical trend and you should probably take some profit and come back later because this is a threat to your bullishness based on macroeconomics, based on 20 years of seasonality, based on analysis of technical trends. And then you go to your chart, you find that there is a bullish pattern. And if this pink arrow fails, which probably, as Karnak points out, probably is the case, and it never does that, then the next leg is this instead, Karnak. And that's your opportunity. Cha-ching. And you'll see that on different patterns on different time frames. Sorry, I'm trying to erase, but I won't do it. There you go. So the threat goes away and becomes a new opportunity for a higher low, higher high. And that's how you use it. Because you understand the magnitude of these things and you understand the opportunities being presented. And this is all before you even gone to your chart, Karnak. You haven't even opened a chart yet. So in the old example of the arrow pointing down, I could instead open up my chart and say, well, you know what? If that threat fails and this price level holds and we do not make a lower low, then I'm buying a dip and I'm taking this sucker north. That's how you do it. Because why would you be ready, willing, and able? Because based on macro, you're bullish. Based on seasonality, you're bullish. And based on your technical charts, you don't even have to look at your charts. You already know that it's trending up. So now you're getting strength patterns. Check. But there's a threat to the strength. So it just means wait. And then later, it might turn back into an opportunity. Go, 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 go. Long, long, long. Buy, 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 buy. But if it breaks out, take your money and take a walk. So Karnak, at 4 o'clock, I'm doing performance coaching. So if you guys want to learn how to trade the right way, and in my humble opinion, there is no other way to trade. Yes, you can scalp. I have no problem with scalping. Oh, yes, there are other tools. That's true. You can use, like, am I an Elliott Wave guide? No. So is Elliott Wave wrong? No, I didn't say that. But the right way to trade is understanding the techniques of how to analyze your charts and execute trade patterns and whatever strategy you want. But if without seasonality, without macro, without market sentiment, without the technical readings over top of technical patterns, then your biggest challenge of, let's say you are quote unquote just a scalper, you don't know what to be scalping. There are so many opportunities to be scalping. There might be dozens and dozens. There might be 50 different charts for you to be considering to place in your scalp. But the challenge with scalping is you're probably only doing one or two charts. So for you to be very successful as a scalper, or to be more successful as a scalper, you need to know what to be scalping now and which direction is likely to yield a 13 pip trade versus a 30 pip trade. And there's so many things to look at. How do you know which one is working? Well, the way I look at TRADARS is it gets you to a significant improvement in the noise to action ratio. So if you can spend, 5 to 10 minutes a day every morning before you even open up a chart, if you can spend 5 to 10 minutes doing some analysis, and instead of having 50 different charts to potentially look at, you only look at the 3 or 4 that are most likely to be successful for your strategy right now. And it'll only take 5 to 10 minutes, and now you're like, oh, well, I'm going to look at all the euro pairs today, but not Swissy. So you might look at euro dollar, euro yen, you might look at euro pound, you might look at euro Aussie, and you just and that's it. And those are the opportunities you're going to look at today. And everything else is a waste of time. Not only are you wasting your time looking at all the other charts, but you never get to the right conclusion of which charts to actually even look at. So why don't you just start with the 4 opportunities most likely to succeed today and skip everything else? Well, if you can't quantify it, right? And I mean mathematically quantify it, then you're just spinning in circles. You're random. And that's not cool. So anyways, that's that. I'll see you at 4 p.m. For everybody else, I'll see you tomorrow. But hey, YouTubers, almost everybody in this chat subscribes to traders.com. So why don't you consider traders.com? I mean, seriously, you should think about it. Huh? It's only money. You can make more money, but you can't make more time, so stop wasting your time.